Welcome back to Yahoo Finance on the Move. Markets are trading higher at this moment. We want to talk about muni bonds. And to help us understand what's actually happening in that sphere, Peter Hayes, the managing director and head of BlackRock's Municipal Bond Group, is joining us now. And it's good to have you here, Peter. Thank you.
Thanks for having me, Adam. How are you?
Very good. Want to start with something you pointed out in a note to your clients, in which you said this discussion on Capitol Hill when McConnell said, let states go bankrupt. You said congressional approval of another round of federal aid to the states is far more realistic, and we expect that to happen soon. You don't expect there to be defaults, and certainly states are prohibited by the Constitution right now from declaring bankruptcy. So what does that look like if we get more assistance from the federal government for muni bonds and the investors who like these vehicles, for the tax breaks, for all kinds of issues?
It is a really important point because there are always, whenever we see this fiscal stress, there's always rhetoric around states and cities declaring bankruptcy. And actually, there's no entity, no legal authority for states to file bankruptcy. So you're absolutely right there. And even cities, it's very difficult. There's really only statute provisions in about, I think, 26 of the 50 states. So it's much more difficult than perhaps headlines lead you to believe. But it is an important point. What we are looking at is sort of the health of the overall market, though. Obviously, this economic shutdown caused by the pandemic has created stress in every sector of the market, whether you're a city, a state, a toll road, an airport, all of which are financed by municipal bonds. So the question becomes, what will the fiscal stimulus look like and how much will it help? And we define it as really more of a liquidity issue than a solvency issue. So the economic downturn has created a big drag on revenues, even with transportation. You think about mass transit, people are riding less, there's less planes and airports. I mean, all those have implications for revenue. So it really is, how do they get through this cash crunch for a period of time? And now the Fed created this municipal liquidity facility, which is, I think, an important backstop, which may help. But it's clearly not a solvency issue. Long term, there's a lot of things they can do, and we've seen some states already look at doing this, cutting spending. They can raise taxes. There's an awful lot they can do long term. They have to continue to exist. I think that's the important point.
Peter, there are two different parts of what you just said. There's the bonds that might be, the interest is paid for through dedicated taxes. That's one thing. But what about a state, for instance, New York or Illinois or Kentucky, that have huge pension obligations? You just said that they could raise taxes, but we're already, for instance, in a high tax state in New York. Can they really go that route to meet these obligations?
Well, that's the $64,000 question: is how much are they willing to raise taxes? What are the implications of that for the economy, for their population? I would say generally, just given New York and the tri-state area and its importance and, being a financial center, et cetera, they probably have some ability to raise taxes. I don't think it's a lot given what's happened the last several years, but it is an important point. And the other side of that is, do you have to cut spending, and how much can they actually do that? So I think that's going to be really the important point. You're right about some of those states. So some states came in a much stronger financial positions than others, and they're able to weather this much better. Illinois actually came to market last week, but they came at a very, very wide spread. There was a penalty rate for coming in a weaker financial position than many of the other states. And I think that's the big issue. They still have market access. That's the good news, but they're paying a price for it.
So, Peter, do you expect to see a big increase in issuance then in the next year as we see these various municipalities trying to get creative with how they're going to raise the funds that they need?
So I'll answer that two ways, because it's an important distinction. One is that how are they going to create this or close this gap on the cash shortfall from the big drop off in revenues? And that's what the Fed facility is designed to do, should they choose to use it. The spreads are a little bit expensive. Some issuers say they may not use it, but there's other ways that they can do that. So that's sort of the short-term borrowing needs. So the bigger one is, what will they do with things like infrastructure and capital spending, and how much is needed to perhaps retool their economy or retool their capital infrastructure, et cetera, given some of the behavioral changes from the pandemic longer term. I would say if they had to do it today, it's difficult. I think longer term, they're going to have to look at ways to be creative around borrowing more in the market. So a year from now, I think they may be borrowing more than they are today.
Hey, Jared Blinkley here. You mentioned the Fed, and I just want to follow up on that. They're in the process of giving support to the muni bond market, and they've widened the net, so to speak. Is there any more they can do? Is there any more that they should do to help these municipalities?
So, what they've done so far is create a liquidity facility, which is effectively a backstop. It hasn't been utilized yet, but I don't think it's fully set up yet. It's supposed to be operational in the next few weeks, I believe. So it'll be interesting to see if issuers use that. Now, the HEROES Act, which was introduced, I think, last week, that has a number of increasing elements, and there's a big push, I think, in Congress to help more in the states and cities. So I think there will be more forthcoming. And to answer your question, fiscally, I think there has to be. I mean, there's an enormous gap that has to be made up from this downturn in the economy. And the states and cities just can't do it all alone. I mean, I think to Adam's question, there's only so much they can raise in taxes. So I think more will have to be done on the governmental front.
Peter Hayes, we appreciate your being here, the head of BlackRock's Municipal Bond Group. Perhaps in our next discussion, we can talk a bit about the monoline insurers. But at this point, we have to say thank you and all the best to you and the team at BlackRock.
Same to you. Thank you very much.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.